SMB Investor with Nick Bryant and Sean Smith.
Hey everyone, you got Sean Smith here, managing partner of Search Fund Ventures and co-founder of SMB Investor Network. Today I'm joined by Dev Shah, who is an expert in micro acquisitions and completed his first acquisition of Sourcely AI with an exit just recently. He's now embarking on supporting others with completing micro acquisitions and also helping investors get into the space. So we're going to hear from Dev on how he goes about this. So Dev, I'll let you kind of talk about your background and get into it.
Awesome. Thanks a lot for that, Sean. I'm sure pretty much nobody knows me, so a little bit about me. I'm 23 years old, originally from Mumbai, India, but I went to college in California and I came across the world of buying businesses almost 2.5 years ago when I first came across acquire.com. And before that, everybody told me, okay, after college, you can get a job or you can start a business. You have a job for a little while and then you start a business. But buying a business was, for some reason, never really mentioned. And as soon as I came across acquire.com, I was in love very quickly. Fast forward a couple of months, I made my first acquisition, which was Sourcely AI. It was a business that we bought for only $4,000. And from acquisition to exit was about 15 months. And we made about a 40x return on investment in that time. So yeah, besides that, now we started this, I call it pocket fund. It really just started with our first acquisition, but we just made our 7th acquisition a couple of weeks ago, helping advise different buyers and different players in this space. I'm just trying to do cool things around this space because I'm genuinely super excited by it. And I think, honestly, buying a business is not a new concept at all, but I do think this space is coming into a new time for it, where I do think there will be a lot of things changing and new players into the space like acquire.com, right? Which is actually only 5 years old itself, or a little bit older than that.
Yeah, and this is, a lot of the folks that we work with are kind of search fund entrepreneurs or independent sponsors. So they're going out, they're finding a kind of an old economy business, like a trade contractor, manufacturer, right? And they're kind of running an acquisition process around that type of business. The types of businesses you go after are more kind of in the software world, if that's correct. So maybe tell us about kind of your, sweet spot for these types of deals and how you think about it.
100%. So I will definitely say our sweet spot has evolved a lot as we've actually learned about this space. So the way when I first and this is an analogy I use for my analysts a lot, is that this buying businesses space it's kind of like a video game map, where you first come in, everything's fully dark. You can't see anything. You have no idea what's what, where it is. And then as you venture into each space, kind of opens up, they show you what's there around that, but you still don't know what's there in the rest of the map. So that's what I feel like a lot of my journey in this space has been. So I do recognize a lot of the traditional space is a part of the map that I've never really ventured into, right? Which is these traditional, boring, in-person, physical businesses, right? That have 5, 10 plus years of ownership, right? Of growth, of revenue history. What we are usually looking at is this newer space of the market, which is purely digital businesses. So this can be a SaaS business, newsletter, e-commerce business, an SEO play website. We've even gone as niche as Instagram theme pages. We help certain buyers with buying Reddit communities or any kind of communities, Slack communities, Discord communities. So there's a lot of different types of businesses in this space. Generally, digital businesses usually are sweet spot is anything that has above 60-70% profit margins. Very little owner. Usually we try to buy businesses where the owner is either not interested, not putting in effort, or there's it's somehow making money, but that's just because it's hitting that pain point well, right? Or it has good organic kind of traffic, so that's what we try to focus on. And if I was to distill it into one main thesis, and this is something that I've realized is extremely important, is that we're looking for a business that's solving a specific problem for a specific person. as long as it's doing that and it hits some of our other criteria, then that's golden for us. So that's generally what we like. And we also like buying businesses for 1x annual revenue or around that. So we've personally never bought a business for over 1.5x annual revenue. And like some of our clients have, obviously, but for Pocket Fund, we're specifically looking for undervalued deals, where we think that immediately from buying it, there's already an upside potential, even if we may not be able to you do a lot with that business, so that kind of hedges our risks as well. So that's kind of how I think about it right now.
Yeah, and if you're buying something for 1x revenue, it's doing, such high profit margins, you're paying yourself back within, 1.5 to 2 years, right? As long as you kind of maintain where the business is. So that's pretty neat. How are you generally structuring these deals? Are you, taking a loan alongside investors? How are you kind of raising the funds to buy these businesses?
Yeah. So since its start, Pocket Fund has now itself bought 7 businesses and been involved in over a dozen deals now in total. I have never put in any more money besides my initial investment in that $4,000 acquisition. So besides that, everything with Pocket Fund has been funded by its own cash flows. And so what we do is for each acquisition, we might bring in a partner, right? So that's usually somebody that's has some kind of expertise, right? Or some kind of unique domain knowledge, and they usually buy the business with us, right? So that's the way in which we've kind of invested together with people. We do have something that we're testing right now where we have a client that we're working for that we're acquiring a business, he's acquiring the business entirely, and we're putting an operator in place for him, right? So we obviously get some equity, kickback, success fees, stuff like that, but the entire business, majority of the ownership is to him, and we're putting an operator in place to run that business. So that's kind of the setup we've had right now. But yeah, personally, I haven't invested any more besides first acquisition.
Got it. So you bring investors in on the equity side primarily.
Yes.
It doesn't sound like you take out much debt on these deals. It's
No.
mostly...
No. I'm 23. I just think I don't know enough about the world to take that out yet. That's just kind of the way I've been thinking. And also these deals are very small, so we haven't felt the need to take out any debt yet.
Right. And it's important because, in the search fund world, a lot of times people will use a substantial amount of debt as well as equity to buy these businesses, which can amplify investors' returns, but it also creates risks if, earnings decline.
Yes.
So you're buying them fully with equity, which obviously is a safer capital structure. You're raising that equity from outside investors. And then it sounds like there's a couple different ways you're working with buyers. Buying them through Pocket Funds. That's you guys as the kind of principal acquirer. You've got clients you work with who maybe that's an investor or an operator who wants to buy something. I guess lay that out for us. What are the various ways you work with folks?
Yeah. So I think honestly, we're honestly learning a lot and are pretty flexible, but so I think these are things that are changing depending on the right person and what they require, right? But generally, the main way in which we work with, especially search funds or software aggregators, anybody that has an arm within their company, is deal flow, right? So deal flow is the number one, the way I see it, deal flow is like the blood of the private equity or any space, it just constant. Everybody's hungry for deal flow. They don't care if you're a 23-year-old kid sitting in India or if you're a super experienced operator sitting in the US, so that's something that I've really liked, so we leverage that to just provide a lot of deal flow and understand how these funds work. Besides that, we do have certain clients that have us on a retainer, so they get personalized deal flow, right? So we're usually sourcing anywhere from 30 to 50 deals per week, right? And that's through my team of analysts. It's currently a team of almost 7 people now, actually. And yeah, between all of us, we're able to get 30 to 50 deals per week. About half of those are for everybody, right? They aren't personalized, and about half of those are personalized deal flow. So there's different clients that we work for that we're basically giving them 5 deals every week according to their criteria, right? And in order to get those 5 deals, we're looking at least 100, if not much more than that. Doing a lot of outreach and just a lot of, if I'm being honest, like banging your head against the wall until like a deal drops out of there, and like doing that on every single Facebook group out there, every Discord group. So yeah, I'd say those are the two main ways in which buyers work with us. Then there's of course investors. So that is a very particular, because the way I'm looking at it right now, my goal is not to make money as such from like, somebody buying a $50,000 business and me putting an operator in place. Right now, it's me testing this business model, right? And if it's something that works, then it's something that we can expand, right? Because right now the shortage is not capital or deals. Our shortage is operators, because operators are very difficult. There's more than enough capital and deals in the system. So I do think that one is a bit more tricky. And then of course there's on the sell side. So we do help certain like apps, especially larger apps, help them get an exit, because there's not as much velocity or that much movement from the buy side in the app space as there is in other things, right? Like software companies get a lot of outreach from random people looking to buy them, but apps not as much. So yeah, we have a little sell side stuff as well, but yeah, I think generally our bread and butter is buy side advising and kind of honestly doing whatever we can. I think we are really hungry to learn as well. There's very rarely anything in A that we would say no to. Our motto is usually like, you tell us what you need, you tell us the deals that you need, and we'll figure it out, right? And if we can't, we'll let you know. We'll let you know the problems we had, but I am very confident of, being able to figure things out, especially given enough iteration.
That's great. So, for the deals you do through Pocket Fund, how do you kind of define your investment evaluation process, your criteria, and how has that kind of evolved over the, number of deals you've done at this point?
Yeah. So I think like, honestly, initially, I did not have an investment criteria whatsoever. I was very much just trying to figure stuff out. I think what really defined was the first acquisition that we made was a student AI tool, right? Which made a lot of sense because I was a student at the time. So after that, we bought 3 more businesses that were all student related businesses, right? 1 newsletter and another 2 software businesses. So that was kind of like a student AI kind of roll up play. And then this second thesis after that. So the newsletter was working really well, right? So after that, I ended up buying 2 more newsletters, right? So we had like this student roll up, this newsletter roll up, right? And we ran those. So that was about like the 6 acquisitions, right? So those 6 acquisitions, I made them way too quickly in about basically 6 to 9 months. So it took me 6 months to make my first acquisition. And then I got way too excited. And then I just started
shopping spree.
Yes, and it was not the right idea. I should have stopped to build the right team, make sure I had the right processes, but it worked out all right. There's been not a single deal that we've lost any money on. We've made at least a couple of a multiple on our investment on everything. And yeah, we've exited now 2 of those newsletters, 1 of the software businesses. And I think our thesis has definitely changed a lot, right? Earlier it was just like doing these kind of roll ups, and also looking at what are we good at, and according to our operational excellence, making a decision on the acquisition, right? Which is very not really a proper thesis, right? So now I think we know that, look, we're good at social media, we're good at SEO, influencers. Generally, we're very good with B2C, and we don't have as much experience with B2B, right? So we know what we're good at. And besides that, honestly, there's a lot that I've learned from the greats in this holding company acquisition space, so I'm constantly taking from them, to refine this criteria. Yeah, but that's kind of what we're looking for right now,
Very interesting. So it sounds honed in on B2C. Your skill sets are around kind of digital marketing in a lot of ways. So
yeah.
You mentioned early on that one of the key criteria that you come in with is that you are able to add value to a deal, right? So it sounds like most the deals you're going to do probably will have some type of SEO or social media value creation strategy around them. Is that fair?
100%. I think definitely, especially social media, because like, say for example, with just my personal page, in the last 9 months, I've gotten like 50 million views on Instagram, because TikTok is banned in India. So that's something that we're very good at, and the cost for us. Because like the cost for us is just my time and like talent here in India, right? And the cost is very like there's a huge arbitrage with having operations here and having customers in the US, right? By here, I mean in India, and then having customers or having the business in the US. So we're almost not only is there like a growth playbook around organic social media, but we also know that almost definitely any business that we take over, we can cut down costs to half overnight, right? Just by putting in our people rather than having like whatever option they had there. Because like Americans, like they love getting a VA for $7 an hour or $8 an hour, but that's still really expensive. Like what people pay for a week's work to one of these VAs, we're able to source like very good talent, like not amazing, but decent talent, especially in terms of drive, right? For like the entire month's salary is that 1 week salary for that VA. So we're immediately able to cut down costs to 50%, 25% of what they used to be, right? And a lot of these businesses are run using VAs or some kind of offshore labor. So that's another huge benefit that we've seen that like does kind of play into our thesis as well, right? Where we know like, look, if this guy's like for some reason has like expenses that are really high, we can come in and change that immediately, without a drop off in terms of like the actual labor that's going into it.
So that's another pretty interesting strategy. So, on the growth side, you've got SEO and social media, and then sort of on the cost structure side, you're able to come in and pretty quickly change that cost structure and improve what it sounds like already pretty attractive margins. So that's kind of, when you talk about your approach, it sounds like it's very value creation focused, right? It's a lot less about, finding the perfectly fundamentally sound business like many of these kind of search fund entrepreneurs go, right? They look for these businesses that have 20 years of operating history and have consistently grown at an attractive rate with good margins, all that good stuff. You're kind of coming at this more of, hey, I can find businesses that have a good user base, they solve a very concrete pain point, so they have that product market fit. And I know how to bring in, the right cost structure, the right team, and drive growth through, digital marketing. It's a pretty neat approach.
Thank you. And honestly, you put it extremely well. That's exactly. A lot of these guys are looking to buy. And this is something that I didn't even understand initially. I was like, why are you buying a business where you can't fix anything? Like, if it's the perfect business, like, what are you going to buy it and do? How are you going to grow the revenue? You're paying a multiple. You're expecting some kind of growth, So that's honestly something that initially, like, I didn't completely understand. Right. And obviously then I realized, oh, they're taking so much debt and like it makes sense, right? It makes a lot of sense in terms of their approach, right? Because their deal structure is usually very different to us, right? But the way I think about it is that like we're not looking for the perfect business at all. We're looking for a business where it's like the landing page is so shit. How is this making $1,000 a month? That's what we're looking for. Like why how is it making $1,000 a month with such a bad landing page?
Yep.
And we can come in and within the first weekend completely change the landing page, drastically increase the conversion rates, or reduce the churn, or whatever we can do, right? And we've seen like these improvements. Like I think this is also a benefit of building a team now that has done this multiple times, where we're able to make massive improvements within a weekend, within a week, 2 weeks. So yeah, I am definitely looking for businesses that are a bit broken in a way, because then I also know I can buy it for cheap. I can make a drastic improvement very quickly. Right. And honestly, I think the timelines that we work on are very different as well. Right. I do think this is something to mention. Because there's many, so there's, say for example, there's this one newsletter, we bought it for $1,000. We ran it for 4 months, made about like $1,500 during that time, and then sold it for $5,000. So it's like a very, like, that's a very nothing return for a lot of people, right? But I was barely involved in that. That was literally my team took over the business, ran the business, monetized it, and then I just came in to sell it, right? We put it up on Acquire and then sold it. So it's like, and that was 4 months, but we were able to get like a, whatever, 7x return on our investment in just those 4 months. So there are also deals that we do like that, that I think, honestly, just the timelines, the way we approach it, how quickly we want to get the return is very different, compared to, let's say, a search funder who's like buying that business, expecting to run it for the next 10 years. There's a very different level of commitment as well. Yeah.
Yeah, no, it's a really interesting strategy. I mean, you take that $1,000 deal that you effectively turn into $7,000 or so. And to your point, in one deal, it might not be extremely exciting, but you do that 100 times, and that's a pretty good sort of profile. So it's all about scale and, kind of to your point, deal flow with a lot of these. And maybe to that point, would love to kind of hear your thoughts on, how have the sort of softer venture capital funding markets impacted your approach? Because I know, it's harder for folks to raise money.
Yes.
Some companies that have raised money, perhaps they aren't able to exit where they hope to. So what has that done for you?
Honestly, it's made our job a lot more fun. If I can just put it simply, like there's so many VC-backed companies that know they can't get their next round of funding. It's just whether it's the valuation they raised at, the niche they're in, the traction they're seeing, the benchmarks to get that next funding round have gone this is just it's not even in the same conversation anymore. So there's a ridiculous amount of companies that for us are perfect, right? In terms of they have, first of all, they've spent a lot of money almost always on some kind of PR or marketing. They've usually spent money on ads. So there's been a lot of expenditure that gives you a lot of data, right? That you can work with, that you can see what went wrong, what went good, and you'd be surprised, honestly, Sean. I've seen a startup that's raised, a $2 million valuation, so let's say a 200K, 300 seed round or seed round, and they're selling on Acquire for 25K. And this was literally, so I don't think I should say the name, but they were a sports betting startup, right? So obviously a very in the moment space, right? When it was hot, people were throwing money at it, but then after once it dies down, it's very difficult to get that next round of funding. But it was a mobile app. It had 10,000 monthly active users. It had very good usage, right? And they were literally just selling for scraps, selling for 20, 25,000, just so that the founders can put their money in their pocket, I don't think the investors cared about it at all. Then there's a lot of startups that I've seen that have, raised at, during the ZOP era, right? And it's just not practical anymore for them. And they don't want to keep working on their business. They realize that their upside, even if they can put in a ridiculous number of hours, their upside is very limited from this point, because of the valuations at which they raise that. So there's just a lot of very interesting businesses, anywhere from 100K ARR all the way up to 1 million, 2 million ARR, that are just zombie startups, and I don't know if you've seen Greg Eisenberg. He's on Twitter. I'm a huge fan of him. He talks about them a lot, and I've written a couple of posts about these VC-backed startups on Twitter that did really well on Twitter. So I do think people are very aware of these, but they don't really know where to find them, and I would say honestly the first place to start is just the YC directory. YC has like 500 plus startups every single year. Like, I do think it's single digit percentage numbers that are actually making it past 18 months, so there's a lot of businesses in there that can be picked up for a bargain, that can be used as add-on acquisitions that have a lot of potential in them, and on top of that, the entrepreneurs are usually pretty well connected, so they're able to refer you to other deals as well in their network, and this is generally around software, around digital businesses.
Sure.
Obviously, yeah, I honestly think that's a area which I don't know why search funds aren't like shouting about it from the rooftops. I see so much potential, and I'm certain that, people with the right kind of holding companies, like given enduring ventures, right? Or tiny. They're both like every week I see them posting on Twitter, or like maybe that's Sieva from Enduring Ventures, but every week he's posting about how if there's any like zombie VC startup to contact him. But the problem is he's very big. He's looking at a very big deal size. There's so many that's below it,
Yeah.
that's not important to him, that for search funds or for people like me are like literally it's like a gold mine, So yeah, I think that's honestly just made this entire space a lot more fun. Maybe not fun for them, but fun for us for sure.
Sure. Well, yeah, it's, you're now ideally providing a semi-soft landing for some of the folks that didn't really have
Yeah.
another path to exit, right? So, and to your point on how do you find these deals, I mean, it's not well defined, right? And that's what you're getting really good at, and what you're hoping to scale even further with Pocket Fund. Maybe just kind of to touch on one other similar topic. You talked about adjusting cost structure, kind of introducing a more efficient way of operations. I would assume some of these companies, it sounds like, your first acquisition, Sourcely, was already using AI, but with kind of the, growth in use of AI, especially at these types of businesses, how has that, been impacting your approach or your criteria?
Oh yeah, honest. That's with this pace at which AI is going at. That's changing every month. The impact it's having, the way we're planning, it's honestly changing a lot. So first of all, let's take just operationally. So let's just take newsletters, for example. Newsletters are something that's so like AI is so perfect to run a newsletter. Literally we just have like a GPT that we use to create the editions. It's gone from, when we acquire the business, it takes the founder like 2 hours to write an edition to 5 minutes. So that like first of all, it enables us to now run 5 newsletters at once, right? As a roll up without as much time, so just the operational efficiencies, honestly, we're still figuring out the full extent that we can go to. I just think like it's honestly insane. There's also like AI UGC content. So there's literally videos that you'll be like, how is this entirely AI? Right? The avatar is made by AI. The text on it is made by AI, right? And we're running like multiple accounts, we're posting 3 to 5 times a day. And these videos with like 50 followers will be getting 2,000, 3,000 views, and like our goal right now is because our costs per account are very low, because it's basically just labor cost plus like an AI tool, so our goal right now is to scale this up to 30 accounts, 50 accounts, right? And if each of them are getting even a couple hundred views, up to like 1,000, 2,000 views per video, it can be an extremely good distribution system, right? So from content creation, I'd say honestly, AI has been the most helpful. The next is like even like due diligence, right? So let's take technical due diligence, for example, right? So I have a CTO. He kind of does all the technical due diligence because I'm not technical myself. This was definitely like a huge problem when I bought my first software business without knowing how to code at all. But we've been able to figure it out as we go, and now our technical due diligence is, so obviously he hops on a call with the founder, but after that we literally just take the code base, take what's most important, right? Like if it's small, then we can take the entire code base, give that to the AI, and he has like a prompt or like a structure that obviously, like, it's not one shot, he has to work with it a bit, but the AI will come out with an entire report for us, a securities report, authentication report, API report. I don't even know what else. An entire kind of like the entire technical due diligence, So what it used to take us literally 2 to 3 weeks, right? Because like going through the entire code base can be a lot of work. But now that it takes us like a weekend, so it's like huge differences because of the AI. And so something that we're building right now that's honestly the most exciting thing that we're working on is it's basically like a multi-agent system that can act like an analyst, one of our analysts, right? But it's a system that has perfect memory and is always working, right? 24/7. So within this system, it has the database of our deals, right? And it actually has individual. So right now it just works with acquire.com, but it's basically like a chatbot where I'm talking to this chatbot and I tell it like, okay, what are the interesting deals that match our criteria on Acquire today? It'll give me the names, right? And I'll say, okay, message X, Y, and Z, right? And it will go out, message them, tell me the reply, okay, book a meeting for Wednesday at this time with X. It will go book that meeting, create the calendar links, and ask them for the email, send them the invite. And this enables us to, because like we were having a lot of trouble with, because we're generally having like our conversations, analysts to conversations on Acquire is like 1:20, 1:30, sometimes even more than that, depending on their niche. So this completely streamlines that, and like it's honestly improved our productivity so much because now we are planning with this in mind, right? That we're going to keep improving this. So it's just changed the way how I think about this, and that's why I said it's changing so much because like literally 2 3 months ago none of this was possible.
Sure.
And yeah, I just think like also on another side, this isn't really it's not quite on the operations, but I think that there's a lot more deal flow because of AI, right? So first of all, people are able to build things much more quickly, prove things much more quickly, and AI startups themselves are, I mean, don't quote me on this, but from what I've seen, they're the fastest growing startups or businesses that we've seen. And that's not even okay. There's people like Coso and Lovable, that have like reached 10 million
Sure.
ARR in 90 days. That's the VC backed venture scale example, right? But even on a indie hackers bootstrap level, I don't think SaaS businesses reached like 10K ARR, 1K MRR or more than that. Like the speed at which they're reaching those milestones is like cut in half or cut in 1/3, from what I've seen. Like obviously now I am very new to this space. Like I wasn't on Acquire 6 years ago, so I can't speak for sure on how that has been increased. But from what I can see is like it's not normal to see so many businesses that are 6 months old that are making like 20, 50 MRR. That's more unique to AI businesses than to SaaS businesses. Because it's the same business model, but just the adoption as well, the way the hype around AI that may die down for sure, but I feel like we're already at a point at which it's reached some kind of equilibrium, and that pace for growth is still going for these guys.
Sure.
So yeah, I know that was a bit of a long answer, but yeah, AI is changing a lot for sure.
Well, it's kind of like you've got the perfect storm for your strategy, right? You had, it's been a challenging VC market, so there's a lot of quality companies up for exit that fit your strategy. You've got a good ability to kind of create value for these companies, and now AI is a whole new way to kind of introduce your playbook. And there's still aspects of it that you're learning, but you're able to kind of introduce that to businesses that were historically operated pretty differently. So it's not too different, I would say, from the strategy that a lot of search entrepreneurs and folks like that take. It's just a different application in a different segment of the market. So very, very neat. We're coming up to kind of the end here, so I want to make sure that we touch on how people can invest in either Pocket Fund or in the deals that you're doing. I think for the most part, you're kind of raising capital on a deal by deal basis or marketing deals that way. So maybe talk a little about how that process works.
Yes, for sure. Like you mentioned, where we only do deal by deal basis right now, right? I think that provides whoever wants to invest with us and us a lot of flexibility, right? Which I greatly prefer. So the first deal that we've tested this on, right? I'm happy to provide like some kind of breakdown or a case study, for anybody that might be interested. But it's one investor, right? They're investing below $50,000 to make this initial acquisition, right? They have majority ownership with it in it, and we are bringing in an operator who's going to run the business, right? There's like an equity pool or spread for the operators, right? So depending on how much effort the operator puts in versus us, right? The equity will be split accordingly. So that's kind of the vehicle we're using right now. What we are going to be doing going forward is actually putting up our deals on the SMB Investor Network. So the people will be able to invest in specific deals through that, right? So whether that's like a specific acquisition, right? So it's not like we're going to have a very specific acquisition and the operator in mind, and most probably some capital already committed when we put a deal up on SMB Investor Network. Right. So I do want to, like, rather than have more investors, I'd rather have fewer ones that are like towards the niche or that can add value besides just capital. So I think like SMB Investor Network would be amazing for us because quite frankly, I didn't have the confidence to do this myself before, right? For let's say multiple deals, right? I would have probably just like done another one, then done another one, but with SMB Investor Network, I do think it gives me that confidence, to put a deal up. And then also I get that distribution to people that are looking for this and get that feedback, which I think can be extremely helpful, So yeah, I think that's kind of the way in which this is going to be running, right? Is there anything that I might have missed there, Sean?
No, that's great. Yeah, we'll make sure for folks that are interested in kind of micro SaaS acquisitions with, Dev's playbook and operational and kind of growth skill sets behind it, they'll be able to subscribe to kind of your deal portal, your co-syndication portal. So that'll be really cool. Any kind of closing remarks you want to leave off with before how can people kind of get in touch with you, in other areas and all that stuff?
Yeah, for sure. So my username on pretty much all social medias is Dave Likes Business with a Z. BIZNESS. So I'm super responsive on Twitter and LinkedIn. So feel free to reach out to me on either of those platforms anytime, but generally on YouTube, Instagram, any other social media. I tend to post quite a bit. Yeah, I think Pocket Fund is honestly just at the start. Our goal is to do things that shouldn't reasonably be possible, for a bunch of kids sitting in India, so anybody that wants to help us, that wants to work with us, like, please feel free to reach out. For us, the priority is learning and growth. Right now that's all we're really looking to do. So yeah, I'm sure that there's going to be many of your listeners, that I think we can learn a lot from. So I would love to connect with anybody and just learn from them.
Excellent. Well, I know my business partner, Nick, and myself are a big fan of what you're doing. So hope we can add value along the way.
Really appreciate that. What y'all are doing is insanely cool as well. Like, I think the list for buying businesses is really where it's at. I really think that there's a lot. I feel like there's going to be a new kind. I mean, there's going to be a lot of changes in investing in buying businesses, because I don't think the economics of angel investing in VCs works anymore, and I think that economics are going to get worse as we go. And real estate can't be the only option for people. So yeah, I think that SMB Investor Network has an insane amount of potential. Honestly, I'm really excited that somebody's building this, because I really felt like there was a need in the market, and I'm really happy you guys are filling that.
Awesome. Well, we look forward to working together.
Yes, sir.
Take it easy, Dev.
Awesome. You too, Sean. Thank you. Thanks for your time, man. Take care.